we're kind of at the scale of Bitcoin where if Bitcoin does go up a lot, if we go to $1 million of Bitcoin or $500,000 of Bitcoin, we're talking about Bitcoin becoming one of the largest, most important economic factors in the global financial system. At $1 million of Bitcoin, we've created basically one America out of thin air. Like US GDP is 25 trillion. $1 million of Bitcoin would be $21 trillion asset. Probably half the Bitcoin are owned by Americans. So imagine the economic stimulus that you're injecting into the economy as Bitcoin goes up, as you're just increasing the wealth of the hundreds of millions of people globally that own this instrument.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show where the Fed's money printer has more miles than your college roommate's Honda Civic. I'm your host, Jay Hamilton. It's September 10th, Wednesday. Today we are joined by David Bailey, CEO of Nakamoto, a NASDAQ-listed Bitcoin Treasury company, CEO of BTC Inc., which runs Bitcoin Magazine and the Bitcoin Conference. Their mission is to grow Bitcoin's ecosystem by backing public companies that hold Bitcoin on their balance sheet and help to further the adoption of Bitcoin within retail, corporate treasuries, and the sovereign adoption movement. Today, we're going to talk about how Bitcoin treasury companies are set to explode in the future and how it'll happen in the right way versus the wrong way. Is there potential risk from these treasury companies? And where is the upside? Because really, so many companies should have Bitcoin on their balance sheet. And there's a great case to be made for that. We're also going to talk about why David thinks the US government could buy Bitcoin this year. And finally, how institutional capital is flooding into Bitcoin at record speeds with deals doubling and tripling in size overnight. Before we jump in, do me a quick favor, wherever you're listening, give us a like, a subscribe, a review. It really helps the show and helps make sure that we can bring more people into crypto and into investing in a safe way so that they stay and don't get wrecked and rage quit. Today's episode is brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. It's also brought to you by KGeN, the distribution protocol, changing the growth game. With that, David, welcome to the Milk Road Show.
Hey, Jay. Thank you for having me.
Pleasure to have you, my man. I can't believe it's the first time we're having you. Hopefully it's the first of many. Let's start. How you feeling? It's September 10th. Bitcoin sitting around, I think we're at like 113, 114,000.
Yeah, 114, I think right before we jumped on. So
do we bump up above 114? It looks like we might have. Okay.
So yeah, I'm bullish. I mean, in general, I'm extremely bullish on the price of Bitcoin and where we're at. I'm surprised we're not higher in one sense, but also, I'm impressed that we've eaten through some pretty significant selling. And so from that perspective, like the market is just way deeper than it's ever been. So like, I feel like those are two counterbalancing forces, but in general, the direction is up only. And I think, this year things will heat up, but like all the great bull markets, things just accelerate as they play out. So I still feels like relatively early in the cycle, even though if you follow the 4-year cycle trend, we're actually pretty far into this cycle. So it's definitely a cycle that is, rhymes, but is not the same as past cycles. And, that's kind of a new thing. I mean,
do you subscribe to the 4-year cycle thesis?
Yeah.
Still though, moving forward, because then we would top October, November, which I kind of agree with you. I don't think we're going to top October, November this year.
Yeah. So this cycle, my view on the 4-year cycle has changed. It's just like the makeup of the market structure has changed, and like the type of buyers and how they buy, and the amount of money that they're putting into the market, et cetera. It's different than it's been in the past. And the buyers are much more sophisticated. You have rebalancing, you have all these things that are designed to basically smooth out the volatility. And so, I think that's really what we've seen happen is like the volatility has come down a lot, but we're still directionally going in the same place that the price has always gone, just in a smoother, slower fashion. So yeah, I think the 4-year cycle, I don't think it's done. Like, I think maybe it won't be 4 years anymore. Maybe it'll be a different time interval. But like at the end of the day, like what's happening, the reason the 4-year cycle is a valid concept is like the price of Bitcoin goes up so much that the inflation rate of what's coming into the market every day is just too much to be able to sustain. And so, if you're have a $10 million of Bitcoin hitting the market every day, in 100 days, that's $1 billion. If it's $100 million hitting the market every day, in 100 days, it's $10 billion. So there just hits a threshold where the market can't sustain it. I'm personally of the view that like bear markets are something that's like very beneficial to Bitcoin. It's like it's the cleansing mechanism that gets rid of the malinvestments. It discovers the frauds. It reallocates the labor. It reallocates the capital to the people who actually have products that the market wants. So I think it'd actually be a big loss if we didn't have like these cleansing, moments within the space. But like, I just don't see it as being plausible that the bear market starts in 2 months, or that we've even gone up enough to sustain a bear market over an extended period of time.
Mm-hmm. Yeah, fully agree with all those takes. It's nice to put a bear market with rose-colored glasses like that. It is it's nice to approach it and feel good about it in that way. And the thing I think is it always comes back to me with the way you stack your portfolio. And if you are stacking your portfolio with assets that will outlive the next bear market, then you can look at bear markets and say, okay,
100%.
that's fine, right? No big deal. I know Bitcoin's going to be here decades from now, and it's going to be higher, even if there is another. I don't know what you think in terms of. I think you're going to agree that volatility is dampened. So I don't think we're going to get as big of if we're talking about Bitcoin specifically, as big of a drop as we've gotten in past bear markets. But I agree, we still will have bear markets. I think it comes in 2026, though, at some point. The debate is out on when it happens in 2026. We'll have to see. Let's talk. Go ahead.
I do think, on the volatility side, like what's happening is a lot of people are monetizing volatility and selling volatility. Mm-hmm. And so like Saylor's selling vol. There's a lot of people selling vol. And, when you sell vol, you don't change the fundamentals of what's happening to the system. You just change the event curve, effectively, the risk curve. And so like, I think there's a scenario where like we've compressed vol a lot. And when Bitcoin has like a violent move, like that vol is going to like rear its head, and you kind of have a blowout event. And so like, I could actually see us like having if too many people get crowded in any trade, unwinding that trade, has equal or greater, effect than the building up of the trade. Yeah, I don't know. It's very interesting. But I think if you just take like a step back and you just look at this general situation and what's happening, I think we're in a moment unlike any before in Bitcoin, where we've hit a tipping point. Like we've hit a tipping point where this asset is now a mainstream asset. And so from that perspective, it's like Bitcoin is going to infiltrate every capital pool that exists on the planet. And right now it is touching such a tiny little sliver of what is out there and available. And so, yeah, I think like as this tipping point that can't be stopped continues to play out, and as it, siphons up the low hanging fruit of these liquidity pools, the price of Bitcoin is going to go up a lot. And like we're kind of at the scale of Bitcoin where if Bitcoin does go up a lot, if we go to $1 million of Bitcoin or $500,000 of Bitcoin, we're talking about Bitcoin becoming one of the largest, most important economic factors in the global financial system. At $1 million of Bitcoin, we've created basically US GDP, one America out of thin air. Like US GDP is 25 trillion. $1 million of Bitcoin would be $21 trillion asset. Probably half the Bitcoin are owned by Americans. So imagine the economic stimulus that you're injecting into the economy as Bitcoin goes up, as you're just increasing the wealth of the hundreds of millions of people globally that own this instrument. And they own it now in their pension funds and in their index funds and in all these different forms and fashions. So, we spend so much time like wondering what is like GDP growth going to come in at, or is like payroll is going to be 200,000 or 100,000? Did we grow at like 5% or 4%? And it's like, dude, when we're at the size of US GDP, the daily swings in the price of Bitcoin is going to be equal to 1 year of GDP growth in a day. It's like, hey, now like Bitcoin is more relevant to determining like global economic forces than like the Fed's interest rate. It's like almost like this is how Bitcoin just consumes the system. So it's a very unique moment in time. I've never, in the 13 years I've been in Bitcoin, I've never felt like we've hit the tipping point.
What was the tipping point? When you say, because you've been in Bitcoin for so long, what was the tipping point?
There's really two tipping point. Like there's two catalysts that changed my perspective on this. One is the ETF. maybe there's three. One is the ETF, which was kind of like, the barbarians were at the gate, and when they opened the ETF, it was like they opened the gate, they let us in. So it's like, okay, then we've infiltrated the system.
And they're never shutting that gate again because the dollars are, it's very effective. They like the profit.
No, that's the thing. It's like Wall Street, maybe they don't like parts of Bitcoin, but Wall Street's like the epitome of capitalism, and Bitcoin is the epitome of capitalism. And so honestly, Wall Street and Bitcoin is a match made in heaven. Like once they get a taste of what Bitcoin is like, they're gonna be in love with it. So I mean, I think we've been watching that play out over the past 2 years, which has been pretty interesting. But the ETF was a big piece of it. And I mean, if you hear the stuff that BlackRock says behind the scenes about Bitcoin, it's like, oh, like there is not a more establishment institution than BlackRock. Like if BlackRock is saying kosher, like if you're saying it's not, you have to defend like why Larry Fink's wrong and why you're right. Like it's not a good place for someone to be. So the ETF was one, and then the next was the election. We had a kind of a front row seat to everything that happened with Trump, and we came away from that whole experience with several kind of observations about where Bitcoin is and the nature of populist movements, I guess. And while there was a great partnership developed between this ideological movement and President Trump, and he has like a very keen eye for seeing potential that others don't, we weren't given that. We earned that. Like, he didn't support this industry out of charity. He supported it because he was impressed. He was impressed by how much we were able to do despite the system being against us. He was impressed by, we earned our place there. And it's like, okay, the reason why is because this is the most widely held asset in the world. It's the most widely held asset in the United States.
Is it the most widely held asset in the world? Is that a fact?
It's less held than the US dollars still.
Yeah.
But outside of US dollars, I don't think there's another asset that's more widely held that has half a billion users holding it.
Yeah. Especially when you consider how difficult it is for so much of the world to hold most assets, whereas Bitcoin is one of those assets anybody can hold pretty much instantly.
Yeah, absolutely. And, every other distribution vehicle that we have to spread other assets globally, now Bitcoin is also on those same rails. So it's like, maybe I would have said Apple could have more more holders before Bitcoin, but like now that we're included in all the same indexes that Apple's included in, we've kind of gained all those holders too. So now it's about not just how widely held is the asset, but what percentage of your portfolio is also deployed into it. So there's complexity and nuance to it. But regardless, like this is the most widely held asset outside of the US dollar globally. It's growing. If you just look at it from a zoomed out perspective, on an annualized basis, we're growing high double-digit percentages per year in terms of the number of users. Think about Bitcoin if it was a religion, okay? And you were a politician, you were catering to a religious group. Like, name a religion that has 500 million users that's growing at high double-digit percentages year over year. There's not one.
There isn't one.
There's just and so like when we were watching this up close, we just realized like the power comes from the support of the people. Like Bitcoin has the support of the people because it is an open, permissionless, decentralized system for everyone. And when we are able to use Bitcoin as a coordination device, which is really what money is like a social coordination device. But when we're able to use it as this common equity that we all are aligned around, we can bring any government in the world to its knees. We can bring any institution in the world to its knees. So it's kind of like we had hit the point in the United States where we're setting, already we're influencing the outcome of the election, but like this is just a moment in time. Next election, we'll turn out even more voters. And then the election after that, even more voters. And then before you know it, 1-2 elections from now, if you don't have the backing of the Bitcoin community, you cannot win office. And then it's like, okay, well then now in that situation, like we've just taken over the system. Like we can make the rules whatever we want them to be. So like we've reached this point of credibility and distribution that, there's no, as Saylor would describe it, organized resistance that is stopping the social coordination. And we're just going to take this until literally every part of the financial system as you know it is integrated with Bitcoin. And there's nothing you can do to stop it.
Yeah, it's a few points I want to touch on there. One is I interview about 250 people a year, all leading investors from every major financial institution. And one thing that you said that everybody seems to agree with is that the U.S. government support for, I'm going to go beyond Bitcoin and say crypto, was the major tipping point that hasn't been felt necessarily yet, because the impact of that tipping point is that every other government around the world and corporation says, oh, okay, we got to think differently about this asset class. And that takes time because institutions don't move quickly. It's not like they turn around the next day and are like, oh yeah, if they're buying, then I'm buying. But that you can't go back on that tipping point. Like that was the only thing that we really needed to finally ensure was, yeah, governments are behind this. Okay, let's go. It's off to the races. And so that is certainly a point you agree with. The other thing that you mentioned, which I find really interesting, is did you know that religion has bottomed as in terms of adoption and faith? There's a upward trend in religion right now. And I've heard Raoul Paul make a connection to the bottoming of a religion is connected to a lack of trust in our governments. And as the lack of trust in our governments grow because of the way that they are managing our financial system and our monetary policy, that people are looking for other things to believe in and other things to connect to, and religion just isn't, a great form of community, a great form of connection, regardless of your beliefs. But you can see how that connection sort of makes a similar connection to maybe you find your place in Bitcoin, maybe you find your place in another community. And you can see that. I mean, the younger generation, right? Are currently, they're connecting in massive ways to a lot of crypto tokens. I'm not going to touch right or wrong. Some of these are going to win and some of them are not. I can say that confidently, but there is certainly that effect is happening right now. I want to shift gears. Go ahead.
It's because the system is broken. And it's like people need an alternative solution, and they're going to keep searching for one until they find one, or they're going to revolt. And that's just the dynamic. And I think one of the things that's been really interesting about the Trump stuff is after getting involved, I had a lot of people reach out from all over the world. And one thing that became clear to me is like Bitcoin has infiltrated literally every institution in society around the globe. There's Bitcoiners in the inner circle of President Xi. There's Bitcoiners in literally every central bank, every treasury.
And know this because you talk to them, right?
Yes.
This is not anecdote. Yeah. This, you know this.
I've talked to every single person that is out there, but it's we hear from people from the Federal Reserve that are Bitcoiners that just, don't say shit at work and keep their head down and go home and buy Bitcoin. I mean, dude, from places you would not believe. And so it's just wow, we've infiltrated everything. And the number one divide that exists in terms of Bitcoin adoption, the number one determinant, if you are pro or anti-Bitcoin, is age. And so if you're young, you feel more comfortable with this than you do filling out pieces of paper and putting it in a tube and putting it in a bank or whatever. If you're old, you're super skeptical. Well, guess what? That's a trade you make all day long, because every year
we get better on that trade.
So it's okay, well, great. Do you want to be aligned with the young people? Do you want to be aligned with the people that are going to be inheriting the wealth, that are going to be running the institutions, that are going to be the next presidents of the United States? Or do you want to be aligned with the people that, in 10 years time, half of them are going to be out of their careers? So, this is a transformation that just, I don't think can be stopped. Again, it's going to take us way beyond that $1 million threshold. But once we get to $1 million, it's like that meme from, I'm the captain now. It's we're the economy now. So
yeah. It is interesting to think about the $1 million as that next big tipping point, whenever that comes. And there's many different price predictions for the long term that'll say it'll come 2030, 2035. I mean, who knows? We don't need to speculate on when that comes. I think we both will agree that it's going to come. I want to break down three main buyers that you have unique insight into, which is corporate treasuries, sovereign wealth funds, and central banks. Let's start first with corporate treasuries. You raised over $700 million at Nakamoto to buy Bitcoin and start a Bitcoin treasury company. Just so everybody listening understands, David has fantastic insights here. Where are we at in terms of, my understanding is we have about 100 Bitcoin corporate treasury companies?
Over 300 now.
300. Okay. So we have about 300. Now, is that a lot or is that a little? Like, there's 4 million companies around the world. In some ways, I think a lot of people look at it and say, oh, that's too many, and we're going to have this blow up at some point. But then I also look at it and say, well, there's 4 million companies and there's only 300 that have Bitcoin on their balance sheet. Like, feels like there's a lot of opportunity here.
Yeah, I think part of the issue is that, first off, there's too few people that understand what's going on, and too many people that are just repeating, like, where they hear other people say. And so, like, we've created this like information, what's the word, like vacuum, where like we're describing things wrong, or we're kind of incorrectly like understanding the phenomenon. A company putting Bitcoin on their balance sheet is not the same thing as a company being, I think, what people consider Bitcoin treasury companies, where you're literally, the point of your company is to maximize Bitcoin per share and try to arbitrage the difference between the Bitcoin standard and the fiat standard. So, like, I think every company will own Bitcoin. I think it's the best performing asset of all time. If you don't, getting back to the tipping point, we're getting close to the point on the corporate world where if you don't have Bitcoin on your balance sheet, what's your justification for that? Like, if I'm a shareholder, like, I want you to maximize value. Like, what's your case for not doing this? And, it's one thing to ignore it when there's career risk, and you don't want to be on the wrong side. It's another thing to ignore it when your company's getting kicked out of an index because some company that owns a lot of Bitcoin just got included to the index, and you're the marginal person on the edge. And you're like, what the fuck? We just lost our position to some company buying fake internet.
This happened. This is real. Like, this, you're not speculating. This is a real story.
When MicroStrategy got added to the NASDAQ 100, someone had to be taken out of the NASDAQ 100. So I think like the same thing works with like capital allocators. It's like everyone wants to be in like the top quartile, but like it's actually not beneficial to be the number one guy. And like, you definitely don't want to be the last guy, or like, below a certain bar. And so there's like this crowding effect where it's like, you want outperformance and stability in your business. And so you want to be like in the sweet spot. Well, the more and more capital allocators that buy Bitcoin and then outperform you start getting kicked down that performance ranking. And like, eventually you're like, okay, well, we have to own Bitcoin too, or otherwise we're putting ourselves at a competitive disadvantage. So I think that is what's playing out on the corporate side. All public companies will eventually own Bitcoin, and it's a massive opportunity. I think when people think of Bitcoin treasury companies, from that perspective, there's not really that many meaningful Bitcoin treasury companies that have any significant amount of capital that they've raised. The way I think about a Bitcoin treasury company is like they're effectively Bitcoin exchanges. They're bridging capital from the traditional TradFi world into the Bitcoin capital market. And, if you ask the question like, well, how many Bitcoin exchanges are needed? Well,
good question.
At least every country has one,
Yeah.
Some countries have, the United States probably has 5 or 6 that are big. If you take this to the like in-game conclusion, you might also be able to say like, okay, well, these Bitcoin treasury companies, they're building a financial system on a Bitcoin standard. They're like the gold bullion houses of the past when we had the gold standard emerge. And, those ultimately just became what we know now as banks. Like that was like the creation of the financial system. And so, if you re-ask the question, like how many banks does every country have? a lot,
A lot.
a lot. You know, so I think the market is quite massive. I think people misunderstand how massive it is, and then I think people misunderstand, like, you know, if I would agree that the world doesn't need 100 MicroStrategies doing exactly what MicroStrategy is doing in the exact same market, servicing the exact same clientele. I would agree with that.
Mhm.
But the capital markets are so fragmented across so many different ways, like across asset classes, across investor types, across active and passive, across domestic and international. So, like, I think there's a space for a lot of companies to do what MicroStrategy is doing conceptually, but to target other pools of capital that MicroStrategy is not speaking to, whether it's because it's not big enough for them to go after, whether it's because they don't have the bandwidth to go into this. But I mean, you can securitize Bitcoin and package Bitcoin in a massive number of ways. You can package it as debt. You can package it as equity. You can package it with commodities. I don't know if you saw the product that launched yesterday from Cantor, their like Bitcoin Gold product that they launched.
No, I didn't see that. What is that?
It's like it's a structured product fund where you get the upside of Bitcoin and the downside of gold.
Huh.
Okay, like there's a certain type of investor that appeals to. Mm-hmm. I'm not saying it's everyone, but there are some people. And it's like, okay, well, that product speaks to what I need in my life in terms of my risk profile or my ideological views or my investment theses, and so I can buy that. So, you know, you can do it with real estate. You can do it with preferreds, converts, you know, all of these different vehicles. And that's just in one market. And then there's, you know, 80 distinct capital markets. So you could repackage each of these different types of securitizations into every international market for every international currency. So it's like, you know, I could envision thousands and thousands of unique, distinct, securitized Bitcoin products trading in, you know, globally in all these different capital markets. And so, you know, how much room is there for that? Again, there's like, you know, not that many that are actually running the Bitcoin Treasury play. Most of them are just copying what's already been done successfully rather than kind of innovating and pioneering new things. There's just still a massive design space in front of us. So I think we are in the first inning of this. You know, at the end of the day, also, this goes back to the tipping point issue is like, we've hit a tipping point. Investors want to buy these products. Well, guess what? Mainstream investors want to buy mainstream financial products. They want to buy it from their brokerage account that they already
have. They don't want
to
buy Bitcoin on chain.
They don't want to fucking wire money to Coinbase and go set up. They want to hold this like they hold any other mainstream asset. Yep. And so that's completely understandable. And you know, there's a lot of reasons why someone may not be able to buy Bitcoin. There's you know, maybe that they don't have products available in their market. Maybe there's they're not tax optimized products, so it doesn't make sense.
Yeah.
Maybe
Japan.
they have a pension fund that limits the scope of what they have. Maybe they have an investment mandate from their fund that they can only buy certain types of instruments. Maybe they live in a market that Bitcoin, as like holding it directly, has questionable legal, you know, has legal uncertainty. You know, maybe they're in a country that's banned it out. Right. Yeah. And so, you know, and then there's also like what I think a big thing that people misunderstand is just like the friction of doing stuff. And you know, someone was explaining to me the other day how much work it was for them to get money from their SIP account in the UK to buy MicroStrategy. It took them like 30 days. And they were like, you know, you have to go to your broker, you have to fill out a form, you have to fax it to them. You have you know,
fax it.
He's calling them multiple times a week to like move it along the process. Like, people don't have time for that. And so, you know, people want one click, you know, people want easy. And so, you know, I think we are so far away from delivering that experience to every investor who has a brokerage account globally. You know, I think it's the biggest opportunity in the world right now.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. The best audience to distribute your product to? Your superfans, duh. But what if you haven't found them yet? That's where KGeN comes in. They help businesses scale digital distribution at a price that makes sense. KGeN's verified distribution protocol identifies the best users for your product and connects you directly to them. Ready to find real meaningful users for your next big product? Join the KGeN network today at milkroad.com/KGeN, spelled KGEN. Okay, so let me connect the dots there. So there's two types of companies. There's Bitcoin Treasury companies that are explicitly running a playbook using financial engineering to acquire more Bitcoin at a lower cost base in order to increase their balance sheet. And then there's corporations that they're profitable for other reasons and are just putting Bitcoin in their balance sheet because they're financially savvy and they realize that it's a better investment to have an asset that is accumulating at 50% a year versus an asset that, maybe is getting you 5% yield, such as a treasury or something. So we have those two types. On the Bitcoin Treasury company side, you're saying there's going to be, double digits in every capital market around the world, in every country around the world, which doesn't currently exist. So there's a long way to go in terms of the adoption there. Those Bitcoin Treasury companies might eventually become banks, financial institutions within those countries, Bitcoin exchanges.
At the end of the day, like each of these companies is trying to build a Bitcoin balance sheet. If you're doing the Bitcoin Treasury play, I prefer the term, like BitBank or Bitcoin Bank, but there's a lot of, calling something a bank has a lot of loaded meaning. So,
Yeah.
I think at one point in time, maybe Saylor was even called MicroStrategy a Bitcoin bank. And
he did. Yeah, I remember that. People didn't like that.
I think it's, it's also, there's regulatory issues with it and stuff. But anyway, I think it's an apt term, but what is a bank? Like a bank is monetizing a massive balance sheet. Like that's what, like, if you want to build a financial institution, you start with a massive balance sheet. And so by building a big Bitcoin balance sheet, like you're going to, in the future, like as this plays out, like the arbitrage only lasts as long as the arb is there. But like, the long-term vision for these is like, take your balance sheet and put it to work to create shareholder value. And so, I think it's kind of like a reinvention of the system that we have today, but with like new medium, new characteristics, new features that are possible for it. But like, we're kind of going back to the beginning of how the old system started, and we're redeveloping it in a new way.
And to me, what stands out there is the acceleration of Bitcoin, whether it be Bitcoin Treasury companies in markets around the world, or whether it just be a CFO saying, my gosh, look at this company over here. Why am I not holding Bitcoin? Which more and more are starting to do. And especially as you mentioned, the age thing, as their boards turn over and we have younger people on their boards, it is inevitable. But it's certainly, what stands out to me is it always comes back to limited supply, right? 21 million Bitcoin. Let's say, I don't know if you have, there's about 800,000 Bitcoin, somewhere between 800,000 to 1 million Bitcoin that is held in corporations, I think is the rough range. That is so small compared to where that's going to be in 10 years. So boom, one massive means of demand that is not slowing down and is only accelerating. What about sovereign wealth funds and central banks? That's more unclear what's happening there. And it feels like there's a lot of governments buying that we just don't know about, to be honest.
Yeah,
that's what I feel.
Funds are absolutely active right now. We're talking to them regularly. I think, well, I won't get ahead of my skis, but there's a lot of investment interest from sovereign wealth funds. Some of them have put pretty large sums of money. That's not a totally new phenomenon. Sovereign wealth funds have been active for at least the past 6 years, doing some high profile stuff, but it's really accelerated behind the scenes. And some of these sovereign wealth funds now, there's one country that between their sovereign wealth funds and the actual sovereigns, has accumulated a 6-figure number of Bitcoins. So I mean, it's happening. It's absolutely happening. And on the central bank side, it's slower, much slower on the central bank side. Like I think that there are basically the only central banks that are really seriously pursuing things with Bitcoin are those that are disenfranchised from the system. So I mean, the Russias, the people who are sanctioned, the people who Bitcoin's the best solution that they have. There's others that are Bitcoin's a repudiation of the central banking system. It's very hard to get a central banker to get excited about Bitcoin because it's really just like
True.
basically calling everything that they do a fraud. So I think where you're going to see central banks endorse and support it first are places where they have a political leadership that can just dictate to the central bank what to do. I mean, even if the U.S. was buying Bitcoin today, the Federal Reserve would hate it. Like even if the Treasury was doing it, so it's not like it's a different dynamic here as either. So and when I look at nations more broadly, I think there's several different ways they're dipping their toes in. I would say probably the most mainstream thing that they're doing is monetizing their energy through Bitcoin mining. That's becoming a pretty widely validated thing to do. If you have excess energy capacity, like you should be monetizing it. So I think there's probably 40 or 50 nation states that have
40 or 50 wow, I didn't realize it was that high.
That's like I haven't counted them up, I'm guessing. I mean, there's a large number that are either running large sites or are in the process of doing their first site, and it's proof of concept stage, but it's still hundreds of megawatts of power. That's not chump change. That's big. So but there's at least 5 to 10, some in that range, countries that have more than a gigawatt of power deployed Bitcoin mining, which a gigawatt of power is a lot of power.
That's a lot. Yeah. Wow. What about I want to step back for a second. You mentioned the ETF being a major tipping point early in the show. For our audience who are investors, what's the difference between investing in the ETF versus investing in a Bitcoin treasury company?
Yeah, well, there's a few. First off, I think one thing that's not appreciated is like most of the world does not have access to a Bitcoin ETF. There's only a few markets that have access, and it's way more difficult than people appreciate to get capital from one capital market to another capital market, especially as a retail investor. So, but in terms of what's the difference between them, first and foremost, a treasury company is an operating business. They're allowed to do things that an ETF is not able to do. They're allowed to take on leverage. They're allowed, basically, an operating company, as long as they disclose it, can do whatever they want to do. As long as it's not illegal, as long as they disclose it, they can take on leverage. They can buy businesses. They can use their own custody solution. They could self-custody if they wanted to. Like there's wide flexibility of what you can do with an operating business. It also allows you to access different types of financial products that you as an individual wouldn't be able to access. Like the corporate structure just gives you a lot of benefits. There's a lot of benefits that come with it. So that's really the main difference, is like you're buying a business that's taking on more risk than an ETF is, and they're promising you performance for that excess risk. And, in some cases, that's a wise decision. In other cases, it's not. So it's not like, just because someone's taking on more risk, it's guaranteed to pay out better than not taking the risk at all.
Yeah, it's essentially it gives you access to yield. If that treasury company can generate yield on the Bitcoin that they hold, 10, 15% is, the range that a lot of them are able to do right now. Great. You're going to get your Bitcoin now with the ETF. Your Bitcoin only is valued at the price. now with the treasury company, your Bitcoin's valued at the price plus that yield that they get, right? And as you mentioned, if they're innovative, if they can do different things with their financial engineering, then they can grow at a much faster rate than the ETF could grow. But there's the risk. So let's talk about the risk for a second. How first let's talk about how does a Bitcoin treasury company need to manage the risk of the leverage versus the volatility?
Well, I think the volatility is something that plays to the favor of treasury companies, because like treasury companies in general should have a very long time horizon. Their capital is permanent. It's not like a fund. It's not like something where there's redemptions. And so when you're able to have permanent capital, you're able to deploy with a long-term perspective, then you're able to absorb volatility and risk that other people can't for whatever reason or are uncomfortable holding. And like that's your opportunity to outperform and do something unique. In terms of like what's the right leverage, Bitcoin is an extremely volatile asset. I don't really have an answer to like what's the right amount of leverage. And I think it can be it's dependent upon the business, because it's dependent upon like, does the business generate income or not? Does the business have another way of paying the debt or not? Does the business have, you have to look comprehensively. Like, is the business trading at a big premium to NAV and they're going to be able to take down future ATM proceeds? Okay, well, then that debt is riskier than someone who is trading at a discount to NAV, has no access to raising additional capital that doesn't become dilutive on a Bitcoin per share basis, and that they're going to have to carry that debt load for a while. So like you have to like look at these situations differently. I think in general, you want to keep your loan to value of the entire business at sub 30%, sub 20%. So, and I think, ideally you want to do what Saylor's doing, which really enables you to ratchet up the risk, because he can't really be defaulted on, or he can't, he can't be margin called. He can suspend his dividends. Like, he's built in a level of flexibility that's beyond what almost any other treasury company out there is able to get from the market. So his model is amazing. It's like, give me your money. I'm going to go speculate with it. And like, if it wins, I'm going to give you a little bit of the action and keep the rest for us. And if I lose, I'm going to suspend the dividend, and you're going to have to wait until, the market comes back. I think that goes back to your earlier point of like, you want to invest into things that you have a long-term confidence in, where, it doesn't matter if it's a bear market or not, like, you're going to recover in time.
Mm-hmm.
So that's generally how I think about leverage. The more leverage you can make in the business without taking on additional units of risk, the better. There's kind of a lot of kind of data and information out there showing you kind of what that convexity looks like, et cetera. I think, in terms of how these businesses like make money, it's not just taking on debt and leverage. Like, I think that, if you looked at a bank and you said the only reason a bank makes money is because of leverage, you wouldn't be like totally wrong. But there's a lot more that goes into operating a profitable bank than just leverage. And so I think like you're going to see these treasury companies really evolve and mature going forward. I think in order to like stay competitive, in order to continue to have access to these capital markets, you're going to have to differentiate your business. And I think there was so much money that came into treasury companies so quickly that we had a glut of businesses clone the strategy, create the headline number that maybe like would attract investor interest. Mm-hmm. But if you read into the details of actually what they did or the terms of the loans they took, some of this is like predatory stuff that you would never agree to in a million years. And so I think the market's also learning that it has to get more sophisticated in terms of assessing like which one of these companies is going to actually be profitable and successful and make you money versus which ones are at a risk of blowing up. And there's a couple out there that we've looked at that it's like, if Bitcoin went to like 90K, 80K, it'd be rough. It'd be rough for some of these treasury companies.
How big of a risk is this potential blow up?
Not big, because the companies that are taking on that type of financing, they don't have very much money. So I mean, it's like, of the million Bitcoins that are owned by corporates, 600 and something thousand of them are strategies. So like, take those out. So now we're down to like 400,000 Bitcoin. Okay, of that 400,000 Bitcoin, 75% of it is owned by, the top 20 companies. A good number of those companies are still like in the process of despacking, and they actually haven't even gone live yet. So like, I think like some of these companies blowing up, you're talking about single digit thousands of Bitcoin. And there's not that many of them. So the risk isn't there now, but as this category expands, which is going to expand quite a bit, like, it will become a growing and increasing risk.
Yeah, something to keep an eye on. Talk to us about Nakamoto. What's the opportunity for investors with Nakamoto?
So Nakamoto is actually like, the whole story of Nakamoto is pretty interesting, but like, we've been into this treasury play for about 18 months. So like, before Nakamoto was even an idea, we were investing into treasury companies, and the first one that we backed was a company called MetaPlanet, out of Japan, through our hedge fund UTXO management. And that was like, it's what really showed us the how effective the playbook is. It showed us that this is not a Michael Saylor thing. This is like a broader capital markets phenomenon. And since then, we've funded through UTXO like 16 or 17 treasury companies, at least 11 different capital markets. Maybe that number's even gone up. Like, we're closing deals all the time. And so like, we've realized, and like, UTXO on the back of these investments became the number one performing fund in the world over the past 5 years. So like, we are extremely bullish on the strategy of taking these two new markets, but it takes money, it costs capital. And so we decided, hey, you know what we should do is we should create a treasury company that we can build a massive balance sheet, and we should use that balance sheet to underwrite accelerating the seeding and launching of these treasury companies throughout the world. And so that's what Nakamoto was. It was like, how do we build a sovereign wealth fund of Bitcoin? How do we build a central bank of Bitcoin that can underwrite the creation of Bitcoin banks and financial institutions in every major capital market globally, and build the biggest balance sheet in each of those markets, so that they effectively in the future will become the biggest financial institution of that market. So that was kind of the thesis. We also saw a common set of needs across these treasury companies. The ability to custody funds, insure funds, prime brokerage, lending, structured products, media, compliance, et cetera. And so we also see an opportunity to acquire operating businesses that are Bitcoin native, that generate cash flow that grows proportionately to the price of Bitcoin. Meaning, like, if I'm charging you basis points on custodying your funds, if Bitcoin goes to $1 million, I'm still taking the same number of basis points on your Bitcoin. Like, my fees have gone up proportionately. So we're looking for businesses that can basically service this global portfolio of treasury companies, and over time can scale the cash flow of Nakamoto as well, which we think gives us like a lot of optionality for whatever the market holds in the future. So that's what we're building. We've made 2 investments now from Nakamoto that we've announced, one last night into MetaPlanet. So we doubled down on MetaPlanet in a big way. And it's only 1 day of trading data so far, but we're up pretty considerably. So it's like, okay, sweet, like non-dilutive shareholder value. And we did another one in Amsterdam, which will be the first Netherlands listed treasury company, which the Netherlands is a huge market. So we're already active on the investing side. We haven't closed any M&A deals yet, but we have announced that we have an option to acquire BTC Inc., which is Bitcoin Magazine, the Bitcoin Conference, and UTXO, once it completes its PCAOB audit at the end of the year. So we intend to have like one of the few treasury companies that's actually generating pretty significant cash flow. And yeah, like I said, I think that cash flow gives you a lot of optionality. Like, there's going to be a period of time where a lot of these treasury companies will trade at a discount to NAV. That's okay. MicroStrategy traded at a discount to NAV. If you're generating income that's going to give you the optionality of like buying your shares back at a discount to NAV, which is accretive to shareholders on a Bitcoin per share basis. So, I think that those are all very useful tools to have. To also pick up on one other thread that I think is important to touch, like this MNAV premium or discount, concept. At the end of the day, to like boil it down in like the simplest terms, is like the MNAV is just a proxy for showing growth. So if you have a certain amount of Bitcoins today and you're growing the number of Bitcoins that you have tomorrow, then I will pay more than the amount of Bitcoin you have today because it's going to be worth more tomorrow. So, and if likewise, like if you're losing Bitcoin, if you're burning money, and you have 100 Bitcoins today, I'd pay less than 100 Bitcoins because like by the time I realize this investment, you're going to have 95. So that's really like in its simplest form, what the premium represents. And if you can't sustain growth, then you're not going to trade at a premium. So like, that's the crux of the matter. So, so from that perspective, I think it's going to end up being very important that these companies generate cash flow and income, because that ensures that they're going to have kind of growth of the balance sheet, no matter what the market conditions are. And I think that those that are able to sustain their business operations and thrive in a bear market is going to create a lot of opportunity for market efficiency for these firms. Like we're already looking at public companies right now that have Bitcoin on their balance sheet and are trading at a discount and saying, what would it take for us to acquire this business, restructure it, take the Bitcoin, sell off the pieces, and how accretive can that be? Very accretive. So it's like the apex treasury companies will absorb and reallocate the resources of the ones that are not destined to make it. So again, it gets back to like, not all treasury companies are the same. Like, you want to back the one that's going to be eating the other company at preferential terms, not the one getting eaten and being like, so sorry, here's your conciliatory check. So, yeah.
It feels to me like there is an opportunity, if there is not a Bitcoin treasury company in a certain capital market, and you can be a part of the first one, that feels like an obvious opportunity.
No, I mean, MetaPlanet started as a $15 million company. Even with the down market that we're in right now, MetaPlanet's down a lot from the top. They're sitting at like a $3.5-4 billion market cap right now. So in a year they've 200x the value of the company. We're like, oh no, it's bear market winter for treasury companies. It's like, okay, if your time horizon is 45 days. So and like we've done, like I said, we've gone into all these different markets. Every one of them has hit. We haven't had one that hasn't been successful. The one we did in the UK is called Smarter Web. Was the most successful IPO in the history of the UK capital markets, going back like 600 years. We invested at a $3 million.
$3 million. That's it. Okay.
And it's down significantly from its peak. I think it peaked at probably $1.5 billion market cap. But right now it's worth like a couple $100 million. A few $100 million. We made that investment in like February, March. So, yes, like being the first in a market, it's like, there was a time where it's like when you were the first Bitcoin exchange that entered into a market, like, yeah, you're going to clean up. And so I think,
what are the markets that don't have a Bitcoin treasury company yet that are like lead? What are like the leading markets that are like missing one?
Oh, I mean, ones I'm really excited about. So Germany, Poland, Turkey, Saudi, Abu Dhabi, any of the GCC countries, Malaysia, Singapore. We just did one in Korea, but it hasn't, we just got announced like a week ago. Russia, Mexico.
I feel like I should stop you. You're just going to keep going. It's a long list, isn't it?
It's a long list. It's India. I mean, there's two in India, both very, very tiny. So like,
We're still
yeah,
so early. We are so
South Africa.
early.
South Africa is one of the biggest capital markets on the planet. Like, I mean, like, there's so much money in all of these markets. Like if you are the first one, if you can execute and you're the first one, you are $1 billion company.
How quickly are we going to get these treasury companies in these markets that you just mentioned? I don't mean specifically, but like generally, like what's the timeline for adoption here?
Within the next 24 months.
Okay, so it's fast. It's fast.
I mean, our goal is to try to be underwriting one of these every week. So,
a week.
Yeah, it's going to take us time to get there, but there's unlimited opportunity, and then it's like, okay, well, as soon as you do those, then it's like the preferreds, then it's like there's so many other products to bring to market behind the equity once the equity is launched. So it's like the equity is just like the kind
of the starting point. Yeah.
You know, I also want to kind of hit on something that I think maybe would be helpful for your audience, which is like just, you know, prioritization from a perspective of an investor, like what to care about. And, you know, I won't shill treasury companies specifically, but, you know, Bitcoin as a concept is one of the most radically disruptive concepts like of the past 1,000 years. And playing out in front of everyone's eyes right now is literally Bitcoin co-opting and cannibalizing the global financial and monetary system. And that monetary system is the foundation on which the global world order is built upon. And so like the world is transforming in front of your eyes. Mm-hmm. And, you know, when you're investing capital, you want to invest into ideas that not only are massive, but are happening. And so, you know, I think when people are investing into crypto, or they're like, hey, I'm into play to earn, or I'm into this, or I'm into that, it's like, these are tiny ideas, like relative to the value of all financial institutions in the world. Like, why are you wasting your time investing in something that's like, okay, you know, marginally impactful when you could be underwriting the next central bank of Japan or of Germany? You know, like it's just like a whole other level.
You know why? I'll tell you why, because I speak to this audience all the time, every day. And I mean, many people listening would fall into this audience of finance is very difficult to understand. Most people do not understand finance. So they don't truly understand the opportunity that you're speaking of, right? You do, you work in this every day. And two, they look at Bitcoin and they think it's too late. They think that's not going to get me the wealth that I want, because everybody, I mean, this just comes back to a general society problem. Everyone wants immediate returns, right? Yeah. So they think, well, I'm not going to wait, because if I have to wait, so I'm going to go try to get a 100x, because everybody over here apparently is getting 100x on YouTube or on, you know, TikTok. So yeah, XRP is going to 10,000 and every TikToker I follow says it. Great, I'm in, you know? And it's unfortunate, because I agree with everything you're saying.
Yeah, well, I you know, first off, from the perspective of, you know, it's too late. It's like, you know, we're not even 1% into the story of Bitcoin. I don't even know if we're 0.1% into the story of Bitcoin. So it's like, okay, it's not too late. And these treasury companies, like, I think one of the things that has really been powerful for them is that they've given that 100x type degen need for, you know, volatility and action that people wanted formerly from shitcoins. Like, this is risk on top of risk, these treasury companies. And so, you know, we've had multiple 100xers over the past, you know, 6 months, 12 months. So I think, you know, from that perspective, there's always a box that you can compartmentalize some component of Bitcoin into, where you can get that upside without, you know, building on a foundation of you know, mud. You know, what was the other issue that you highlighted? It was the 100x return.
It's the I'm too late to get the returns, and it's the I don't understand finance, right? So I don't understand the scope of what you're saying, that the scope. Whereas, like, I understand gaming, or I understand, you know, whatever's closest to me, right?
Yeah. So let me hit on that point, because I think that's one I can really identify with. we almost didn't do the MetaPlanet investment initially because it was a public security. And, I've been in Bitcoin for 13 years. Like, it's all I know. I'm way more comfortable with tokens and, kind of like this whole, like, let's pretend securities are not a thing and we can kind of just live in this digital realm. Yeah. It was, scary to have to interface with regulators and go through these processes. And I'm like, oh man, this is like beyond the scope of what we can do. But then once we did it, it's really not that hard. Like, it's actually, you can learn it really quick. And in fact, all these things that we think we created or invented in crypto or like, crypto inventions, they're really just reskinning things that were invented in traditional finance. And so people actually can understand it pretty quickly because they're like, oh, securitization, I don't know what that means, but wrapping, I know what wrapped Bitcoin is. I know what wrapping an asset onto another chain is. So there's the how we understand crypto to work is it has direct parallels to every part of the legacy, capital market. So I think people could learn it quickly. I think in terms of the scale of opportunity, the amount of capital that's in crypto versus the amount of capital that's in the capital markets.
That's in the capital, yeah.
Yeah, like
we're talking about hundreds of trillions compared to 4 trillion, right? Like,
Yeah, and yeah, in a liquid hundreds of trillions, not a versus the 4 trillion market cap of crypto that a lot of it's not actually liquid. So so yeah, I think it's like it's something that like you can learn, and that's also like where edge comes from. Like, you want to find places where you can develop some sort of information asymmetry. And so like there's very few people that understand both the Bitcoin crypto markets and the TradFi markets to get like both of them. Like it's a huge kind of like chasm between the two of them. So I would encourage people to learn. And then I'd also say, like, if you don't understand like the financial principles at play in the capital markets, you also shouldn't be buying tokens, because those same financial tools are at play there. And if you don't understand it, then it means you're the exit liquidity on those strategies. And so, like, look, tokens are securities. We might define it away from pretending they're not, but people buy them to make money, which is what a security is. And, now you can just buy real securities. You don't need to buy fake securities, buy real securities. Mm-hmm. So, I don't know. I feel like a lot of people are chasing the pennies in front of them, versus like taking a little bit of a zoomed out perspective and realizing the biggest wealth event in history is happening right now in front of your eyes. And if you're focused on these tokens, you're missing where the real money is to be made.
Yeah. And where the risk reward far outweighs the what you're missing out on taking that shot at a 1000x. Just be a little bit more patient, give it a decade, and you're going to get the same end result. David, absolute pleasure to get you on the show today. I feel like we could talk for another hour, but I'm going to wrap it here. Really appreciate you joining us.
Well, I enjoyed the conversation. Thank you for having me. And we should schedule a follow-up to see how correct these predictions were, 12 months from now.
Let's do it. As always, got to remind you guys, none of today's episode is financial advice. I'm not your financial advisor. David's not your financial advisor. If you're making investments, you should speak to a professional, because investing is risky. Thanks for tuning in, y'all. Have a wicked awesome day. We'll see you back again tomorrow. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.